Wondering what is happening to stocks and the market in general today? Well, I have no word for you except tensions around Russia and Ukraine. This is something we thought was behind us, but as a matter of fact, it doesn't seem like it because we have some news that came on this morning giving us another look, another perspective as if, well, what President Putin said around, troops being backed off, from Ukraine, is not actually happening. As a matter of fact, it seems like they're doubling down on, soldiers around the border, and that's how things are escalating. And that's the reason why we have the market down, because a huge, these fears around what can happen to the global economies, not only the economy of Russia and Ukraine, but the global economies is actually something that nobody knows, on top of inflation fears and what the Fed is actually, not inflation fears, but actually when you look at what the Fed will do in response of inflation, how are they going to impact the market? Bunch of people are still going to be, putting the whole economies into recession. Some people are thinking it's not going to do anything, like, Fed Bullard saying, even if it goes all the way up to 1% increase in interest rates in July or by July, the markets are going to be fine and just fine. And some people think, well, as a matter of fact, the bull market is very still alive, and don't be fooled by these recent pullbacks into the market as we see it now in early 2022. All right. So where is the truth? Well, the truth is, since the beginning of this year, whether it's about inflation, whether it's about, Ukraine, everything has to do with growth. Everything has to do with where to put your money to work and gain some decent return, make some decent money. 2021 was most of the record years on track of the stock market. Never before in just a short amount of time, 1 year, the market did what it did. So it's kind of natural for it to pull back a little bit, especially at the beginning of 2022, which is a kind of pivotal year on what the Fed is going to do about inflation. All right. So that doesn't help a lot when you have on top of that something like, a war between Ukraine and Russia that will come and accelerate the fears of some people of them in the market, thinking that it's going to be a recession, meaning the economy is going to slow down. Because when the economy slow down, especially around the world, because you have, restrictions, if the US, for example, follows up on what they say they will do in case Russia does what it's supposed to do with Ukraine, they're going to put a lot of embargoes. And Russia is one of the top producers of oil and gas. So if that happens, it doesn't help into the energy. Prices are going to go up a lot. So if you want to fight inflation, you definitely don't want to have a conflict between Ukraine and Russia. Second of all, if the economy slows down, well, it means margins of companies will also slow down. When margins of companies slow down, it means those companies are making less money. If those companies are making less money, there is no incentive. There is no reason intellectually and logically for investors to put their money into those companies, meaning stock prices will go down. The stock market as a whole will go down, and it may create a vicious effect into maybe what we saw back in 2008. That is what some people think, but it may not be necessarily the case. Nevertheless, if you are in this market for the long term or the medium term, then this is a big opportunity for you to kind of average down, meaning by buying any mutual fund, any index fund at these levels, you are gaining, you're entering at some low levels, given where it could be when it rebounds, because trust me, it's going to rebound. Even if it takes 9 months, it's going to rebound. It's better to be in the market than to actually try to time in the market, meaning I'm going to buy low and sell high, because you might miss a lot of the gap up when we have the rebounds coming. But if you are in some of the sectors that are going to be beneficial when it comes to inflation, like energy, like maybe healthcare, like maybe insurance, like maybe financial, then yeah, you don't have to worry, because this is just the market mechanics affecting your specific stocks, So just buy the dip or just continue to hold on. But cash definitely seems to be the king here, because if you buy the dip here and tomorrow everything bounces back, even in Friday or maybe next week, you can sell, and definitely there's going to be another catalyst that is going to come and pull the market back, and then you can actually get in again. So it's the perfect swing trading market. But again, nobody knows exactly how this is going to end, and that's why people tend to can pull the money out, and that's why prices are going down. But it depends on your view and your perspective and your maturity. All right. So